Building your first investment portfolio is a lot like preparing for a long journey across unfamiliar terrain, and most beginners, when they stand at the starting line, often feel a mixture of excitement and quiet fear, unsure of whether their first steps will lead them toward prosperity or into the thorns of costly mistakes. I've met countless new investors over the years, and the very first thing I tell them is this: a portfolio is not simply a collection of assets. It is a living reflection of your goals, your temperament, and your discipline. Before you buy a single stock or fund, you must understand that the portfolio you build is not meant to impress others. It is meant to serve your future self. And serving your future self requires clarity, intention, and a steady hand. When you begin constructing a portfolio, you start not with the market, but with yourself, your time horizon, your appetite for risk, your financial responsibilities, and your emotional tendencies are all building materials. Imagine trying to build a house without knowing the climate. You might choose the wrong foundation entirely. In the same way, many beginners rush into investments because they feel pressure to start now, forgetting that a misaligned portfolio can create more stress than opportunity. So the first step is understanding why you are investing and what timeline you are willing to commit to. A portfolio for someone who needs money in 5 years looks entirely different from one meant to grow quietly over 30 years. Time does not just influence how your money grows, it defines the type of storms your portfolio must be prepared to withstand. Once your purpose is clear, the next step is determining your risk tolerance, a phrase often thrown around lightly but rarely understood deeply. Risk tolerance is not about being brave or adventurous. It is about recognizing how you react when uncertainty arrives. I've seen investors claim they are comfortable with risk until they watch their holdings drop 10% in a single week and suddenly feel the urge to liquidate everything. True risk tolerance is found not in your words, but in your heartbeat during volatility. And because your emotions will always try to override reason, your portfolio must be structured to support your psychology, not oppose it. Think of risk tolerance as the width of the road you are willing to walk on. Too narrow and every wobble feels dangerous. Too wide and you may wander aimlessly. With purpose and risk tolerance aligned, you move into the architecture of your portfolio. Asset allocation. This is the backbone, the quiet engine, the part most beginners ignore, yet the one that decides the majority of long-term results. Asset allocation is the art of dividing your investments among stocks, bonds, real estate, and other assets in proportions that fit your goals and temperament. Each asset class behaves differently. They rise and fall at different times, they thrive in different economic seasons, and they provide balance to one another. When I guide beginners, I often explain allocation with a humble metaphor. Your portfolio is like a garden. Stocks are the fast-growing plants that can bloom beautifully, but can also wither suddenly. Bonds are the sturdy roots that keep the soil stable. Real estate is the tree that grows slowly but offers shade for decades. A healthy garden does not rely on only one type of plant. Diversification is not an abstract concept. It is the difference between a garden that survives storms and one that is destroyed in a single harsh season. Once diversification is understood, you can begin choosing your actual investment vehicles. For most beginners, broad market index funds are the safest, simplest, and most effective starting point. They allow you to own hundreds of companies at once, spreading your risk and reducing the danger of choosing the wrong individual stock. Too many new investors jump directly into stock picking without realizing that even professionals struggle to outperform simple index funds consistently. When you buy an index fund, you are not trying to outsmart the market. You are partnering with it, letting its long-term growth work quietly in your favor. A portfolio built primarily on broad, diversified funds becomes stable, predictable, and resilient, three qualities that beginners desperately need but rarely choose voluntarily. However, building your portfolio does not end with choosing assets. You must also define your contribution strategy, how much you invest, and how often. A portfolio grows not only from market returns, but from the discipline of steady contributions. Setting a fixed amount to invest each month, no matter what the market is doing, is one of the most powerful habits an investor can develop. This approach, known as dollar cost averaging, protects you from emotional decisions and ensures you keep moving forward even when the market feels uncertain. In my years of investing, I've learned that the most reliable wealth builders are not the ones who make brilliant moves, but the ones who make consistent ones. Another crucial part of constructing your first portfolio is understanding fees. Many beginners overlook the quiet erosion caused by high fees, management fees, advisory fees, trading fees. A portfolio that looks impressive on the surface can lose enormous value over decades simply because too much is being siphoned away. The rule is simple: minimize fees wherever possible. Low-cost index funds exist for this very reason. A difference of even 1% in fees can mean tens or even hundreds of thousands of dollars over a lifetime. Wealth is not just about what you earn, it is about what you keep. Then comes the often forgotten pillar: rebalancing. A portfolio left alone drifts over time. Stocks may surge, bonds may shrink, and suddenly your careful allocation becomes lopsided. Rebalancing is the practice of restoring your portfolio to its original design by trimming what has grown too much and adding to what has fallen behind. It sounds simple, but it requires emotional maturity, because it often means selling what has recently performed well and buying what feels less appealing. Yet this discipline forces you to buy low and sell high, the very behavior most beginners struggle to achieve. But perhaps the most profound step in building your first portfolio is understanding that it is never truly finished. A portfolio evolves as your life evolves. Your goals may shift, your responsibilities may grow, your tolerance for risk may soften. The portfolio you build today is simply chapter one of a much longer story. And if you treat it with care, intention, and patience, it becomes not a burden but a companion quietly working in the background as you live your life. A good portfolio does not demand constant attention. It rewards consistent stewardship. And through all these steps: purpose, risk, allocation, diversification, contributions, fees, rebalancing, there is one thread that binds everything together: the understanding that wealth is built slowly, steadily, and often invisibly. Your first portfolio should not be designed to impress anyone. It should be designed to protect you, to support you, and to grow with you like a trusted partner on a journey whose length you cannot yet fully see. Because ultimately, the day will come when you look back at this moment, at your very first attempt to shape your financial future, and you will realize that this beginning was not about learning to invest, but about learning to continue to shape the kind of person who can walk through uncertainty without losing their center. Because investing, at its deepest level, is not a skill of the hands, but a discipline of the heart. And as you move into the later chapters of your journey, something subtle but powerful begins to happen. You stop seeing your portfolio as a collection of numbers and start seeing it as a mirror of your character. A disciplined portfolio reflects a disciplined life. A patient portfolio reflects a patient mind. A resilient portfolio reflects a person who has learned to stand back up after every stumble. Now, as we continue building from the foundation you established in part one, it's time to talk about the emotional side of maintaining your first investment portfolio. A topic that, in my experience, separates beginners who grow steadily from those who burn out or panic too soon. The biggest misconception in investing is believing that success comes from choosing the right assets. The truth, spoken quietly by those who've walked through decades of market storms, is that success comes from choosing the right behaviors. Markets do not need your brilliance, but your future self desperately needs your consistency. Once your portfolio is built, the next challenge is learning to coexist with it through thick and thin. You will experience times when everything rises effortlessly, when your confidence swells, and when you feel tempted to increase your risk out of excitement rather than intention. This is when many beginners accidentally sabotage themselves, expanding too quickly, abandoning their carefully crafted allocation, or chasing trends that feel urgent but turn to dust as quickly as they appeared. And then, inevitably, there will be the darker seasons, the downturns, the corrections, the recessions. Your portfolio will shrink, sometimes sharply, and you may feel the same sinking emotion every investor feels the first time this happens. What if I lose everything? It is in these moments that your earlier decisions, your diversification, your contribution habits, your asset allocation become your anchors. The portfolio built with wisdom can endure storms without breaking, but the investor must also endure without fleeing. If you sell in panic, you lock in losses that might have healed. If you hold through fear, You allow time to do its quiet, restorative work. The market falls fast and rises slow, but it always rises for those who stay long enough. Another habit that strengthens your relationship with your portfolio is periodically reviewing, not reacting. Reviewing means looking at your portfolio with curiosity. Does it still reflect your goals? Has your life changed? Do your contributions still fit your financial reality? Reacting, on the other hand, means adjusting your portfolio because of fear, greed, or noise. A wise investor reviews with clear eyes and adjusts only with clear reasons. If you can cultivate this separation between reflection and reaction, your portfolio will begin to feel less like a source of anxiety and more like a steady companion walking beside you. As time passes, something beautiful begins to unfold. Compounding starts to show itself. The early years of an investor's journey often feel painfully slow, tiny gains, small dividends, modest growth. But slowly and quietly, these small pieces begin to stack, like droplets forming a river. And one day, often unexpectedly, you look at your portfolio and realize it has grown into something meaningful, something that no longer represents what you contributed, but what time has created. This is the moment every investor remembers for the rest of their life, the day they see, not in theory, but in reality, the power of patience. Wealth built slowly may not excite the world, but it changes your life. But let me tell you something equally important. Your first investment portfolio is allowed to be imperfect. Do not imagine that seasoned investors started perfectly. Most of us made mistakes, sometimes painful ones. What matters is not flawlessness, but commitment. You can adjust, refine, rebalance, and learn as you go. A portfolio grows as you grow. Each year adds not only returns, but understanding. And as that understanding deepens, your confidence begins to shift from external advice to internal clarity. You begin to trust your strategy, your discipline, and your long-term vision. That is the moment you transition from a beginner to a real investor, not when your returns rise, but when your emotions settle. So as we bring this guide to its final arc, remember that building your first portfolio is not about predicting the future, but preparing for it. It is not about chasing wealth, but cultivating stability. It is not about being fearless, but learning to act with wisdom, even when fear is present. If you build your portfolio with intention, maintain it with discipline, and pair it with a long-term mindset, it will become one of the most reliable companions you'll ever have in your financial life. It will work while you sleep, grow while you live, and support you when you need it most. And the person you become on this journey, the calmer thinker, the wiser decision maker, the more grounded version of yourself, that is the true return on investment. Now, if this guide has offered you clarity, reassurance, or even a quiet sense of direction, I warmly invite you to share your thoughts, your reflections, or the moment that resonated most with you. Your words help me understand what truly reaches the hearts of new investors. And if you'd like to keep walking this path with me week after week, lesson after lesson, feel free to subscribe or follow. Together, we'll continue nurturing the mindset, the wisdom, and the emotional maturity that no market storm can ever take away.